Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Aliana binti Nizam, 03D8022F1012. Today I want to present about going concern concept. What is going concern? Okay, now I want to explain meaning of going concern. Going concern is an accounting terms for a company that has the resource needed to continue operating indefinitely until it provides evidence to the contrary. This term also refers to a company's ability to make enough money to stay afloat or to avoid bankruptcy. If a business is not a going concern, it means it's gone bankrupt and its assets will liquidate. As an example, many dot-coms are no longer going concern companies after the tech burst in the late 1990s. Understanding going concern. Accountants use going concern principle to decide what type of reporting should appear on financial statements. Companies that are a going concern may defer reporting long-term assets at current value or liquidating value, but rather at cost. A company remains a going concern when the sale of assets does not impair its ability to continue operation, such as the closure of a small branch office that reassigns the employees to other departments within the company. Accountants who view a company as a going concern generally believe a firm uses its assets wisely and does not have to liquidate anything. Accountants may also employ going concern principle to determine how a company should proceed with any sale of assets, reduction of expenses, or shift to other products. Going concern is not included in the generally accepted accounting principle GAAP, but is included in the generally accepted auditing standard GAAP. Red flag indicating a business is not a going concern. Certain red flag may appear on financial statement of publicly traded companies that may indicate a business will not be a going concern in the future. Listing of long-term assets normally does not appear in a company quarterly statements or as a line item on balance sheet. Listing the value of long-term assets may indicate a company plan to sell this asset. A firm's inability to meet its obligation without substantial restructuring or selling of assets may also indicate it is not a going concern. If a company acquires assets during a time of restructuring, it may plan to resell them later. Going concern condition. Accounting standards try to determine what a company should disclose on its financial statements if there are doubts about its ability to continue as a going concern. In May 2014, the Financial Accounting Standards Board determined financial statements should reveal the condition that supports an entity's substantial doubts that it can continue as a going concern. Two statements should also show management interpretation of the condition and management future plans. In general, an auditor examines a company's financial statement to see if it can continue as a going concern for 1 year following the time of an audit. Conditions that lead to substantial doubts about a going concern include negative trends in operating results, continuous loss from one period to the next, loan default lawsuit against a company, and denial of credit by suppliers. Importance of going concern concept in accounting. Going concern concept is very important for the generally accepted accounting principle GAAP and International Financial Reporting Standards IFRS. The concept of going concern plays a significant role in the way assets are treated. The concept of depreciation and amortization are based on the assumption that a business will continue to perform its operation in the near future. This period is the next 12 months after an accounting period. Advantage of going concern concept. First, companies during the information years will be purchasing fixed assets that will be requiring expenditure upfront, but such assets will be providing the benefit spread over a long term that is well beyond one accounting period. Therefore, the going concern concept provides a way to record the value of such assets. Second, it is the basics on which the profit and loss of the business are recorded for the year to which it belongs. Okay, next is disadvantage of going concern concept. First, financial statements are prepared at cost and not on the basis of current market value. In such a case, if the company, in an event of liquidation, will have asset value at the market value, and as such, this value will be different from the value determined at cost. Second, in the event of business being liquidated, the financial statement will be calculated on the ongoing concern basis, which can be misleading for the stockholders. Okay, that's all from me. Thank you.